let's talk about the differences between whole life insurance and term life insurance. I'll cover some of the basics and we can fill in some of the details at a later date. So let's first go over term life insurance. Term insurance is probably something you're a little bit more aware of. That's something that would be offered if you're working at a job and your job provides insurance. That's going to be term insurance. I'm going to explain to you why it's important to own your insurance. You have a group insurance. That group insurance is going to be a term insurance for the life of your contract, or basically how long you've been working at that certain job. If you stop working at that job, that insurance will be null and void. You can decide to pay for it on your own, which that's when premiums will raise because you won't have that group premium. Term life insurance is going to be for a certain amount of time. It's going to be either 10 years or 20 years, 25 years, 30 years. Term insurance compared to whole life insurance is generally almost always going to be cheaper than whole life insurance. In term insurance, you are paying specifically for the insurance that you purchased. You're not paying for any type of cash value. You're only paying for that face amount, which is basically the amount you would get, or your family would get, or your beneficiary would get if you were to pass. Now, that amount that you pay will determine, and you can choose depending on your health and some different things that will, and your age, different things that will qualify you for different premiums or costs, monthly costs or annual costs for that insurance. Once you have those premiums in place, you will pay those premiums for the life of that policy, for the term of that policy. Then if you don't pass in that time during that policy, you won't get any of that face value. So that's the reason why term is going to be cheaper than whole life, because if you don't pass away within that time, then insurance company gets to keep that money, which of course insurance is for security. So that wouldn't necessarily be a negative. Obviously, we would love for you to still be with us. So if you didn't pay for it, or if you didn't get paid for that amount, let's look at it as a blessing that you're still here with us. Now, whole insurance is going to be different. Whole insurance is going to be a higher premium, but that premium, part of it or percentage of it will go towards a savings where you're going to be able to build cash value, where in the event that you were to decide to either cancel your premium or cancel your policy, or let's say certain policies will allow you to actually borrow against that cash value. So if you've been paying for 10, 15, 20 years, later down the road, if you wanted to purchase a house, you can go ahead and borrow against that, which you don't have to pay it back, but it will lower your face value or your death benefit. So a portion of that amount will go towards that. Some critics of whole life insurance will often say that it doesn't make sense to get whole life insurance because the amount that you're paying, the difference that you're paying from the term versus the whole life is so much higher that the savings doesn't make it worth it. You might as well take that savings and put it into 401k or some type of asset building policy, which does make a lot of sense. And I am actually an advocate for that as well. On your age, I would suggest that you should most likely get a term insurance, especially if you're over the age of 20, 25, 30. You should probably get a term insurance because the amount of time that it takes for you to accrue any cash value from that whole life insurance, you can use that same amount of money and invest it in another way. The exception to that is for a child policy, especially if you have a child and they're under the age of 4 or even 7, you're gonna get such a low rate in a whole life policy, a low premium. That amount that you're paying will collect over time and give that child a golden egg, and will give them a way to either use it in college, or if they want to purchase a house later on down the road. And when you sign up for a policy that young, your policy is locked in. So that rate will never change. So whether they decide and whether they move, they're also going to have a benefit of being locked into their health. So if something was to happen to their health later on, their insurance won't raise. They're going to have that same premium locked throughout their lifetime. So you don't have to worry about something like a diabetes or a cancer scare or anything like that. They're always going to have that insurance policy in place. Now, as well, at a certain point in time, whether it be 15, 20 years down the road, that insurance policy will have paid for itself, because that cash value will become more than the total amount that was paid in premium. So that is almost like having a forced savings account for a child. If you're going to save money for that child anyway, it's easier and better to just have it set up in an insurance policy where you're going to be paying that regardless, and you know it's coming out of your account, and eventually you have the option to be able to take that money out as prior to having death. Now, also with whole life insurance in general, child or general whole life insurance, there's also a option, or also called riders, which gives you the ability to add options to your policy. That's going to give you the ability to create accelerated death benefits. That means that when you, or if something was to come up with your health, a critical health scare, you're able to take some of those death benefits out right away, not the cash value. You're able to take out those death benefits if you have a critical illness, and you're able to use that in your recovery and in those days that you're still here. So that's another benefit of having whole life insurance.